two, whoops, sorry, one.
Hey, welcome everybody to a live Q&A on tax and legal and business planning. It's been a long day. Man, I've had 2 or 3 consultations with clients around the country with really insightful situations, comments, and questions, and I hope to share that with you today. Not their names, of course, attorney-client privilege, but hopefully I can hit as many questions as possible. Thank you for many of you that have been waiting. You're already in the YouTube live chat, and we've got Facebook on Entrepreneur Live and Facebook on my personal channel, I guess you'd call it, live. So I'm here, I'm gonna quit talking, but for those that don't know me, actually, I better say a quick introduction. I'm a CPA, attorney, author, podcast host, and national speaker and pundit, I guess, on tax and legal strategies for entrepreneurs, small business owners, and investors around the country. I've got a law firm with 5 attorneys and staff of 20 or 30, and then the accounting firm with CPAs, 10 or 15 CPAs and a staff of 50 or 60. We're doing taxes and bookkeeping and setting up entities and estate plans and just helping people build wealth, protect it, and save taxes. That's our plan. We don't go to court, I just watch Law and Order. So here we are. I'm gonna do as many live Q&A questions as I can. Today is, what is it, October, are we on October 17th, Thursday? 17th, 4:10 Mountain. So I'm live, baby. This is it. Okay, what do we got? First question. You guys, I got my amazing team. I want to say thank you. Oh, I go off my paper? Okay, I'm going to start here. Rosalie says, go off this first question. Peter says, I have a small business and hire contractors. Moving forward, how do I hire them without making them employees? Petra, only if we could wish it so, right? Many of you, you don't want employees because you've got to issue W-2s and withhold FICA and SUTA and FUTA and get a workers' comp policy. I know, but here's the problem, people. If they look like an employee, act like an employee, you treat them like an employee, they smell like an employee, they're an employee. You just can't call them a subcontractor because you want to, and then you want to give them a 1099 and say, goodbye, see you later. I've got articles on my website, markjkohler.com. Type in the word subcontractor. Several little videos and articles that are easy to read on the topic. Now, Petra's real question is, yeah, Mark, I get it, but how do I get around it? If you have someone working for you, let's just call it that, any of you, you have someone working for you that's off-site, using their own computer, working at their own time when they want. You're not compensating them per hour, I guess, for a specific time period every day. You just say, get this done and send me a bill. And you have a subcontractor agreement, you might be able to get away with a 1099. But again, people, if you've got someone showing up at your place using your computer, you're requiring them to work certain hours and they return and report every day, and they kind of look like an employee and act like one, you're going to have to go down the W-2 route. And last point, if they act like an employee, but you treat them like a subcontractor and they get hurt on the job, you're personally liable. I don't care what LLC or corporation you've got. So be careful, especially paying people under the table to work on your fix and flip or your rehab or your rental property. All right, question, Carly or Maria? We got Maria Alejandro. Did I say that right? Alejandro.
Yes, Alejandro from YouTube. Hello, Mark. Thanks. Trucking business SCorp in Dallas, Texas. We started renting semi-trailers too. Is it a good idea to open another entity to run rental equipment versus all together with trucking?
Okay, they're not rental properties, rental equipment? Sounds like rental equipment, right?
Rental equipment. It's operating business SCorp's treated different than rental tax-wise.
Okay, so here's the concern, everybody. Let's do my trifecta. Everybody, you should know this if you've followed any of my other videos on YouTube or my books. We're going to have our trust down here. We're going to have our SCorp over here. And Alejandro says he's doing trucking. So he's got trucking services. He might have employees. He might have truckers that are 1099. That's a whole other issue. But we've got our little trucking business here. Well, if Alejandro is saying, hey, I bought rental properties in Texas as well, so he's got his Texas SCorp, I got rental properties, should I have a separate entity for that? Absolutely. If you're going to have rental properties in Texas or rental properties in Arizona, you're going to have a separate LLC for your rentals. And I'm not saying an LLC for every rental. We might pop a couple in each one, but we're not going to set up our LLC out of the gate in, I wanted to say right off the bat, or out of the gate in Nevada or somewhere like that. We're going to set up the LLC where the rentals are, not where I live, but where the rentals are located. Now, Alejandro throws a twist at us. He says, I've got equipment. Now, if he owns a trucking company, he might be talking about the trailers and the rigs, and he might want a separate LLC for his equipment, so his S-Corp is really operating as a shell. The hard part with that is, how do you get use of this equipment in your business? So you're like, well, Mark, I'll just rent the use of these trucks. So I've got this truck here. Let me see if I can do my little truck. I'm going to rent the truck to the S-Corp, and my LLC is going to own the truck and all this equipment. When you rent personal property to your S-Corp, you've got to collect sales tax. Now you're paying sales tax in Texas for using equipment that you own. That's expensive. Now, I'm not saying I'm an expert on Texas sales tax, but I'm saying this is a common problem around the country. You've got to double check the sales tax rules for renting personal property even to your own company. And I've had clients get audited and owe 3 years worth of personal property sales tax, and it adds up quick. I just got chills saying that because it is a scary thing when it happens and you can't get out of it. So I'm just going to say this. Is it good for asset protection? Sure. Throw your equipment, throw your rentals all in these other entities. I get it, Alejandro, and you're going to rent them back to your S-Corp. I love it. For asset protection, it kicks butt. But you got to be careful about the sales tax issue. So look into that. Get your accountant or one of our tax attorneys to do a half hour of research or an hour of consultation and research. We can get an answer for you real quick. For now, I put your equipment in the S-Corp. That's cool. Bonus depreciate it. Use it. Be careful. Get good insurance. Keep your rentals over here. Probably keep the equipment in the S-Corp until you get a good answer from a qualified professional. All right. Carly, what do we got?
John asked, I'm switching my LLC to an S-Corp through your office, and I have a question about payroll. Is it still okay that I'm starting payroll in October, even though my S-Corp is being backdated to January? Is that going to be an issue with the IRS?
Ooh, I love it. Great question, John. So for everybody up on the same speed here, what John has done is he's had an LLC. And I didn't do a perfect circle because it's taxed as a sole proprietorship, but he had his little LLC. Now he's making bank enough that an S-Corp election would make sense. And if you've got an LLC and you're going to make around 30 to 40,000 net, so let's assume John's brought in 60 grand this year, 20 grand on expenses, and he's netting 40. Well, he's going to pay self-employment tax out the rear end. Not exciting. So what he's going to do is convert it to an S-Corp. He's not going to set up a new S-Corp. He's going to take his LLC and make an S election. And now his LLC becomes an S-Corp. He's still going to be John Enterprises LLC, but for tax purposes, this goes away and it morphs into an S-Corp. We only charge like $125. Very simple. And he says, I'm going to backdate it to the 1st of 1/1/19 because I was an LLC at the beginning of the year. Now, this is a common strategy. We love it. If you're not an LLC, you can't backdate into an S-Corp. Your S-Corp would start now. But John's saying, I'm going to backdate it. Now, if you have an S-Corp, you've got to do payroll 4 times during the year for yourself. You're just going to do a payroll report. Watch my other YouTube video on when to use an LLC and when to use an S-Corp in the comparison. Good 5 to 10 minute video on that. But John's already sees this coming. He's got to do a W-2. And he's concerned because he hasn't done a W-2 all the year. Is the IRS going to be pissed? The answer is no. In the first year, you get a get out of jail free card. So you're okay, John, this first year to do payroll here in October for 3rd quarter and then do another payroll at the end of the year in January for 4th quarter. So 3rd quarter and 4th quarter, you're going to be okay because you're going to knock out 2 payrolls. You got 2 weeks left to get 3rd quarter payroll done. Get it done. We've got a payroll service, but you can do this. Now, next year, you're going to have to do it all 4 quarters, which is okay. But the first year you make that election, the IRS is not going to be mad that you just did it at the end of the year. Talk to your accountant, again, someone in our office maybe, and make sure that your W-2 is chosen for the right amount for the entire year and double down the last 2 quarters. All right, next question.
Gonas from YouTube says, hello, I am working with W-2 9KY and I have a negative cash flow rental property. Also did 3 fix and flip partnership with my co-investor. Am I eligible to be real estate professional and deduct the whole expense?
Short answer, Gulnaz, is probably not. Now, let me answer this for everybody in detail. He's got a W-2 day job. That's right. And he says he's making about 92 grand. All right, that's cool. And then over here, he has an LLC with a negative income rental property, which is normal. You're going to have loss on paper, even though it might be appreciating and you're getting cash flow. So that's a good thing. So we've got our rental. He's got a day job. Now the loss on this rental is going to be deductible against that 92 grand. And Gulnaz, what I wouldn't worry about is you can deduct up to $25,000 in losses up to when you're 150 grand AGI. So I don't know if it sounded like you were single, but if you're married and you got dual income, you probably aren't going to make it. But if this is just you and you've got a loss, you're going to get that loss against most of that income, which is okay. So you don't even need to be a real estate professional. But Gulnaz is saying, if I've got a fix and flip over here and I've got a partner and I'm 50-50 and I have a rental over here, is that enough to qualify me as a real estate professional? Probably not, because you've got to show that your full-time job is in real estate. And even though you're putting in 750 hours, it's a two-part test, you've got a full-time day job. So I don't think you're going to qualify. Now, for everybody out there, get over to YouTube after this broadcast and just make a note on a post-it over there that you're going to watch the real estate professional Mark Kohler. Just type that into YouTube, and there's a great video there. I also have several articles on my website, markjkohler.com. Type in real estate professional, and then in my newest book, the Tax and Legal Playbook, I've got a whole chapter on this strategy. So you want to study up on this, everybody, if you have rental property. It's a great write-off, and a lot of CPAs screw it up. Now, on that note, is this the book I'm giving away today? Okay, Rosalie said I'm giving away the book Financial Freedom. For any of you out there that share this video, you're in a drawing for the book. And in the morning, Rosalie is going to give this book away. And I'm going to right here sign it and write 10/17/19. So that's today. And I'm going to say thanks for watching. So anyway, if you'll share this video, Rosalie will do a little drawing in the morning and mail this out free of charge. It's a great book, The Business Owner's Guide to Financial Freedom, what Wall Street isn't telling you. And if you invest in real estate or have a small business, you're going to love it. Okay, thanks, Rosalie, for giving that away. Okay, Herb.
Herb says, I have an LLC taxed as an SCorp for real estate flipping. I also have an LLC for my rental properties. Should I transfer both of these entities into my living trust as part of my estate plan?
Yes. Herb, great question. What do I owe you, $5? That's a freaking awesome question. Everybody wants to know that answer. So Herb has a trust, and this is a RLT, Revocable Living Trust. He might be married, single, kids, no kids, whatever. But what he's doing is saying, hey, if something happens to me, I want my assets to be distributed with no court involvement, no probate, and no blood-sucking lawyers. So this is what a trust will do for you. So he wants his trust to own his LLC that owns the rental. That's great. He's got asset protection here. And then he has an SCorp for flipping properties. And the SCorp should be owned by the trust as well. Now, if we set up your trust, Mallory Warner, why don't I say that slowly? Mallory Warner, call the office. She'll make sure that your ownership of your companies is transferred to your trust. We include it with almost every estate plan, depending on which plan you're in. It's usually not a problem, going to be included. But I want also, don't forget, John, I want Herb, I want your home owned by the trust and all your IRAs and 401ks to go into the trust. So you want to fund the trust. Life insurance as well. Anyway, it should all go there. It's good. There's no tax problem. There's no banking problem. And it's going to save you a ton of legal fees and make your family a lot happier. When you're dead and you're in the coffin, you're going to be like, covered you, woo! And they're all going to be happy. They're going to dance on your grave. Be happy. I don't know that. I'm going to give up. That was really bad. Okay, what do we got? Anything else? Home investor from California.
Yes. He says, hi, Mark. Thanks so much for being awesome. We live in California. See you in OC on 12/7. Question is, the individual LLCs, COPs, SCorps, holding entity, and Wyoming privacy protection.
Okay. So just kind of explain it, it sounds like. Okay, home investor in California says, Mark, will you mention this rental property COPE Wyoming thing? Was that it?
Yeah, I kind of skipped a part. Wife and I have 6 rentals in Arizona, looking to expand. Decent equity in each. No LLCs yet. Homes are in personal names.
Okay. I'm going to say home investor in California, you've got 2 or 3 options. And I'm not the type that's going to sell you a Cadillac when maybe a Honda Civic will do the trick. So let's look at your 2 options. And also, home investor mentioned that I'll be in Orange County on December 7th for a full-day workshop, includes lunch. I think I'm going Mexican food. It's Orange County. It's going to rock. When I'm in Philadelphia, we're doing Philly subs. And when I'm in Chicago, we're doing Portillo. See, I do the thing. Hawaii, luau. That's what my workshops are all about, making it fun, getting you a tax write-off. Anyway, you can watch live on the web for $99 all day long on December 7th. So thanks for mentioning that. So home investor has 7 rentals. They live in California, but they've got rentals in Arizona. I'm going to give them 3 options. Okay, so here's the operations side. We're not going to worry about that. They've got option 1. They could set up one Arizona LLC and put all 7 rentals in it. It's better than nothing. Did you notice what home investor said? All their rentals are in their individual name. That is not good. If anything goes wrong, they can come after your home, get a personal judgment against you, garnish wages. Do not do that. Home investor, at least get one LLC in Arizona. Because you live in California, you're going to have to register it in California as well. Kind of sucks, but it's great asset protection. And you're going to divide it amongst all 7 properties, the cost. So this would be option 1. Now, option 2. You would probably get 2 LLCs in Arizona, and I would put 4 properties in one and 3 in another. At least you're splitting your eggs into separate baskets. You're going to have to register these in both in California and Arizona. And you're like, Mark, it's $800 a year for that LLC. It sucks. And I know, but you've got some equity. You've got valuable properties. It's just a cost of doing business. So own it. Now, option 3, which I think will actually save you on your California fees and give you better asset protection and better privacy, is to go with the COPE. And that's what they applied here. What I do is I set up an entity in Wyoming, then I register it in California, foreign, and I get 2-way protection with this. I can form it with your address and name, nowhere to be found in Wyoming. Then I could register this. I register 2 LLCs in Arizona and make the Wyoming entity the owner. And then I go 3 and 4. Now I'm only going to pay 1 California fee and have my Wyoming entity and then have it own these 2 other LLCs. So now you have 3 LLCs, but I have 1 tax return, 1 registration in California, and I get the protection of inside outside. That's going to be more of the Cadillac version. This is more kind of the, medium-sized car. This is the cheap car. So you can choose which method fits you best. In a consultation, we tailor it to your needs, but I'll see you in California on December 7th. Great question. Lots of options, and it depends on your situation and how much you want to spend. Okay, Michael.
Is rolling over my 401k to an investment for my business a good idea?
Wow. So Michael says, and thanks for letting me do kind of a new picture for every question. Michael's got a 401k over here. Now, I don't know if that 401k was from his own SCorp or if it's from a day job, and he's got this 401k. It sounds like it's an old 401k because he left employment somewhere, and now he's saying, I want to use that 401k to start my business. Does that sound right? Well, you really have 3 options. I know this is deep. The first option is, if he's got a current day job and this is a 401k that's currently active, the most he'll probably be able to do is borrow from it. And you can borrow up to $50,000 or 50%. So I'm going to call that option 1, borrow. And he's going to be, really the maximum is going to be about 50 grand. And then he can use that as the seed money to start a business or to go buy a rental somewhere. I'm okay with that. That's option one. Option two it's called a ROB strategy. Now this is deep. This is a company the company that's the best at this right now is Guidant. They're out in Seattle. I love them. They do a great job. I've been to their corporate offices twice in the last 4 or 5 years. We work closely with them. You're looking at least $5,000 to set up a structure like this, but the 401k becomes an owner through what's called an ESOP, and the 401k kind of goes, well, no, the 401k is still there. In fact, I'm going to move the ESOP up above, and then you create a new corporation, and it's a C Corp, and your 401k really funds the new business. And then the C Corp can hire you as an employee. So now you don't own the corporation, your 401k owns it, and you get to work for your own company, and all the profits goes to your 401k, and you get a salary. A lot of people like this. Think of it like a franchise opportunity. My 401k is going to create a corporation to buy a McDonald's franchise, and I get to run the McDonald's, and all the profit goes tax-free into my 401k. That's option two. Option three, and this is probably the one we've done the most over the years, is we take this old 401k and we roll it out to a self-directed IRA. And this IRA goes and forms an LLC. And then you go start a business. The drawback here is that you can't work for that LLC. And so all the profits are going to go back to your IRA. And you'll be like, Mark, well, I want a business and I want the 401k to start my business for me. Well, now you're looking at the ROB strategy. And I'm going to put ROBs. And anybody interested in this, go search Guidant Financial up in Seattle and type in the word ROBs. And that's going to be this option two. And then if you're over here, you're going to borrow against the 401k, and that's option one. My pen's dying. Okay, Rosalie's taking care of me. No more big fat Sharpie, huh? Okay. Just down a little Diet Dew here. Having a good time with you guys. Thanks for being here. I love this. Okay, I've got to keep moving. Tim, are we over to Carly? Tim
from YouTube. I have a solo prop in California that nets about $42K. I'm phasing out over the 18 months. Have started a new biz, LLC formed. Should I bother forming a SCorp with a solo prop just to dissolve it later?
Okay, and I may even have you repeat a little bit of this. So we've got a sole proprietorship in California netting around $45,000. 42. Tomato. Okay, and then we're in California, and then he's got an LLC or he doesn't?
He's phasing out this solo prop over the next 18 months because he started a new biz, which is formed LLC. So his question is, should I bother forming an SCorp with a solo prop just to dissolve it later?
Well, Tim, I don't like your answer or solution at this point. Now, I don't know all the facts in your situation, but let's look at this, people. He's got a sole proprietorship, and he's out there and he's making $40,000. Now, on the face of it, I'd want to get this into an SCorp, and it's going to save him taxes. Even if you pay $800 to California, you're still saving more than it cost. But he says, Mark, I formed an LLC to start a new business. And Tim, I'm going to go out on a limb here. If this is your new business and this is your new LLC, just let it also run your sole proprietorship. Run both businesses in the same LLC. And set up an LLC that's a generic name, like Tim Enterprises, and then let it run the old sole proprietorship until it dies in 18 months, and let it start the new business, which might be a new URL or a different DBA or a different trademark. Don't set up the new business under the name, don't set up the new LLC under the name of the new business. Set up a generic name. This is your Microsoft. Then you can have multiple businesses flowing into one LLC. And what are you going to do? Make an S election. So this will be a new SCorp to run multiple businesses. Now you've knocked out several birds with one stone. Now, Tim, I don't know if your fact pattern would allow for that, but that's where I'd go with it. Set up an hour with one of my attorneys. It includes the setup of your LLC or SCorp, whichever way we go. We charge $800 for an entity in any state in the country. and you get an hour with a real tax attorney planning for you, not someone sitting in a cube in Nevada that's going down the hall that asks an attorney what to do. This is a tax attorney, Lee, Devin, Kevin, Jerem, or Christy. Those 5 attorneys are going to be on the phone with you to decide what's best, and it's $800. That's worth it. So check that out, Tim. Great question. All right, Derek. Okay.
I have a W-2 job as a regional manager for a small self-storage portfolio. I end up driving my own car about 300 miles once a week to check on different facilities and managers. I pay for gas with a company card. Am I able to deduct miles on my personal taxes minus the dollar amount the company actually spent for my gas?
Derek, the answer is no. Sorry, bud. Derek, this is a big problem with the new GOP tax bill. Now, don't go hating on Trump or the GOP. They did a lot for big corporations, and on Main Street businesses, we got some sweet benefits for auto and SCorps and all sorts of things. But where we took it in the shorts is listen everybody, if you have a day job and you have unreimbursed employee expenses, they are no longer a write-off. So if I'm a cop and buy a gun, or a fireman and buy some new boots, or I'm an employee driving the company car, but I got to pay for my own gas for this stupid thing, you're not going to be able to write that off. So I'm sorry. Tim, what I want you to focus, is it Tim? No, what is his name? Derek, bud. What I would recommend is let's start facilitating a small business on the side. Now I can start writing off maybe home office, cell phone, some mileage, some computers, some laptops, all sorts of things. And everybody, some people go, well, Mark, it's too, and this is one of the consultations I had today. Some people say, Mark, it's too risky to start a small business. I go, it's too risky not to start a small business. What happens if Derek loses his job? Does he have a small business that he can fall back on and really ramp up? I think it's income security to have a small business on the side. And Derek, you're going to get a lot better write-offs. Then I had another consultation this afternoon where someone was like, I really want to quit my job and start a small business. I'm like, no. Start the small business on the side until it's extremely successful. Keep the day job as long as you can. You don't want to just quit a day job to start something on the side, and then you're going to put too much pressure on your business to pay your bills. Watch out. You want to find a balance, people. And just that conversation alone could save you a ton. So make sure you talk to a kind of a tax legal professional that's not pushing you to quit your job. That's scary, not good. Okay, Justin.
YouTube says, how do you handle equipment, vehicles, home office deductions when you have a W-2, LLC side hustle, not enough income for SCorp, and a rental in an LLC?
Wow. Okay, I love this. Justin, did everybody hear this? Let's diagram Justin's situation. He's got 3 things going on. He's got a W-2 day job. All right, that's cool. And he has a side hustle, LLC, cool. So this is the side hustle. And not enough income for an S election, but that's cool. And then, Justin, what did he say? He's got a rental property. So now he's over here and he's got a rental. Now, in our world, we've got to figure out, is he married or single? How much money is he making? What's the plan for the side hustle? What's the plan for the rental? But generally, we're going to want 2 LLCs, one for the rental, one for the side hustle, and then his day job. Now, are we going to get any write-off for his day job expenses? No, that's the problem Derek had just 1 question ago. Derek's like, what the hell? I don't get to write off any of those car expenses. But in Justin's situation, he's got a side hustle. So this is where we're going to write off equipment. We're going to write off home office. We're going to write off internet, cell phone, travel, dining, all this good stuff. This is what I talk about in my book, is all the sweet write-offs that most CPAs aren't talking about. Let's make this happen. Oh, but he's got another bucket where you could write crap off over here in the rental property business. So we're going to take a bunch of expenses here, a bunch of expenses here, and a good accountant is going to try to balance this and get the maximum deduction from the 2 of them. That's what's going on here. So Justin, I like where you're headed. Make sure your accountant is talking with you and trying to put this together in a creative way to maximize your savings. That's the goal here. Ash.
I have an LLC. Can liability insurance or EM insurance protect us from being sued?
And he just said an LLC. We don't know what kind of business. Okay. So Ash said, and we can use Justin's example here. So let's kind of bring Ash's question on top of this. Ash says, do I have an LLC and should I also have insurance? Is that kind of what he's asking? I think is a good balance. You want to have both. Some people say, oh, I don't need an LLC. I had a consultation 2 days ago. The older couple, they've got 5 rentals in LA. No LLC. Oh, we just have insurance. We're okay. What? Are you kidding me? Some of them were expensive rentals. One was an Airbnb. The other one was low-income housing. Well, we've never had an insurance claim either. We're good. One problem. They could lose it all. We're in California. No one sues anybody in California. Are you kidding me? It's not that they have the wrong accident. It's they have a tenant get the wrong attorney. And some attorney wants to go all in on this thing. They could lose all the rentals. So we want to have both. We want to have a 2-layer protection. We want to have an LLC for our rentals, and we want to have a decent insurance policy. Now, is the insurance going to help us every time? Maybe, maybe not. What type of claim are we going to have? Now, I don't want to double down. Well, I'll get an umbrella policy. Do you know umbrella policies pay out 1% of the time? Because they come in after and only after the regular policy covers it and maxes out. So many people in California go, oh, I'll just buy umbrella insurance. I'm good. It's cheaper. No. They rarely ever pay off. Now, do I have an umbrella policy? Sure. Because if I get some uninsured motorist texting and driving, I want an umbrella policy to protect me. But I'm also going to have an LLC. Oh, well, it costs $800. Now, that's California. Everybody else, generally, you're going to be a lot more affordable. New York can be expensive. Texas, Illinois, some of those states are going to be a little higher expensive, but California is the most expensive. But look, you got the Sea Breeze, you got In-N-Out Burger, you know, the coast, Venice Beach. That costs people. It costs. So unless you're enjoying the benefits of California, pack the bag, get out. It's too expensive. All right. Okay, well, who else we got?
Says, please do the Molly story.
Oh, okay. All right. Yvonne, I like this. Everybody, that's funny. And some of you are like, who's the Molly story? All right. Okay. Let's use Justin here as an example. Now, this is a good one. Okay. I'll keep this short within 5 minutes and do a couple more questions. Is that all right? Okay. One of the strategies I teach in my book, and it's a big one, is putting your kids on payroll. Now, Molly, who's now 16, they grow up so fast. It was almost 10 years ago, 6 years old, I put her on the payroll. I mean, I get kids on the payroll when they're 6. They're shredding paper, they're cleaning the office, emptying trash. Be careful, they get their fingers cut in the shredder, but it's okay. They'll grow out of it. But anyway, so that was a joke. I didn't want her fingers stuck in the shredder. Now, anyway, I would get Molly working on the payroll. So let's talk about Justin here. Justin has 2 businesses. He could hire his teenagers, his 6-year-old, maybe even he's got college students he's still supporting. What if Justin was buying rental properties where his kids are going to college? Wouldn't that make sense? He's got 3 kids. So Justin's over here with 3 rental properties and he's got kids going to college. They could manage the LLC. And if they're the manager of the LLC in another state than California, he's not even paying the California registration tax. So this is a really good thing. Any of you, wherever your grandma or kids live, buy rentals where they go. So your kids could be getting a 1099 because they're over age 18, and managing your rental properties. You're getting a write-off to go visit your kids at their college or your grandma or whatever. Okay, well, Molly, back when she was 6 or 8 years old, she was working for my S corporation. And what we do is you have a family management company and I pay a management fee and then I pay my kids under age 18. Kids over age 18 get a 1099, either out of the LLC or directly out of the S Corp. But kids under age 18, you take this extra step. Now, this is all a chapter in my book, the Tax and Legal Playbook, and I've got videos in my tax and legal library. You'd love it, couple $100, lifetime membership. I shoot videos every year. I've been doing it 9 years. So anyway, Molly one day comes up to me and she's like, Dad, I need money to go to the mall. I'm like, okay. Now, her teenage sisters had invited her to go to the mall. Now, if your older sisters invite you to the mall, this is a big deal, right? And so she's like, Dad, I need $10. Now, I'm up at the computer. This is on a Saturday, and I'm typing, and I'm working in the home office trying to get some emails out. And Molly's like, I need $10. I'm like, did you do your paper shredding? And she's like, no. I'm like, you can't have $10 until you get your paper shredding done. Remember, she's working for the biz. You got to get her work done. Meanwhile, her older sisters are out in the park, out in the driveway honking, honk, honk, and they're texting me, "We're going to leave Molly if she doesn't come." I'm like, "You better not leave her. You're going to be grounded." And they're like, "Come on, Dad, we're trying to be nice." I'm like, "Shut up, get out there." I'm trying to return emails. Molly's screaming and crying, trying to shred paper. I mean, it's all hell's breaking loose. But I'm a fair and reasonable employer, so I say, "Molly, you get your shredding done. You can have $10." Whew. Meanwhile, I'm texting the older kids, "Stay out there, you're grounded." Ugh. Everybody's mad. I'm not getting any work done. But, whatever. So Molly shreds all of her paper and comes back and is like, Dad, can I have my $10? I'm like, "You didn't empty the shredder." She's like, "Dad, oh my gosh, this sucks. I hate my life." I'm like, "Just deal with it. Just empty the freaking shredder." She's like, "All right." So she goes over there, empties the shredder. She's crying. She's like, "Dad, oh, this is terrible." And so I'm like, "Shut up." Meanwhile, the kids are texting me, "We're leaving." I'm like, "No, you're not." Oh, I was going to go crazy. I almost fired her right there. Anyway, I was good. I stayed on. Anyway, so she finally empties the shredder, drags it out to the garage. There's paper shredding all the way to the garage. And she comes up, she's like, "Dad, can I have my $10 now?" I'm like, "Well, look at this mess. You got to sweep this up." She's like, "Oh my gosh, Dad. Oh. Falls on the ground, starts crying. Some of you have employees like this. They throw a temper tantrum right there in the office. So I'm like, "Molly, please, just clean up the mess." So she's crying, emptying up all the paper. She's like, "Can I have my $10 now?" I'm like, "Okay." So I transfer $10 right on my app. I transfer $10 from my SCorp to the family management company and $10 into her 6-year-old debit card at Wells Fargo. I just got a write-off for $10. Leaves, the kids drive away. Whew. Now, was it worth it, a $10 write-off? Probably not worth the write-off. But what did I accomplish? I mean, this was huge. We talk about this in our family all the time and joke about it because what did I do? I taught Molly, you don't get paid till your work's done. Number 2, you don't get paid unless you do a good job. And then she's got this $10 that's on her debit card. Now, a month or 2 later, this is great. We're at the mall, and she's like, "Dad, I want to go to Godiva and get some chocolate." I'm like, "All right, go ahead. You got your own freaking money. You do whatever you want. I'm not giving you money." So I just took her to the food court and took a tax write-off for my employee experience, it's good stuff, So anyway, so she's over at Godiva, and she's and they won't use her debit card because it didn't have the cash reserve little symbol. Now, that's improved. This was a few years ago, right? So anyway, I'm like, "Well, go to the ATM and get $10 or whatever, for $20. And she's like, "All right." She goes over and she goes, "I can't get $20 out of the ATM." I go, "You got money on your card?" She's like, "Dad, that's a bad ATM." I go, "What do you mean it's a bad ATM?" "They take $2." I was like, "Oh my gosh, oh, hallelujah, like she's totally figured it out." I'm like, "This is amazing." I got college students that are like, "I don't care, bank fees, I don't care." She's 6 years old, and she realized if you don't use a Wells Fargo ATM, you lose $2. I mean, this was hard. This was blood money. She learned that, she had to shred paper for this $10. She ain't giving $2 to, chase whatever. I was like, "Oh my gosh, this is amazing." So anyway, the moral of the story is I have so many clients that start a business because it's a family business. They're teaching the American dream. They're saving money, paying their kids to work at the New York deli, the Oklahoma farm, the Idaho potato farm, whatever it is. Get your kids involved in the business. Teach them the value of $10 because they got to earn it, and you get a tax write-off. And some people go, "Mark, that's way too risky. You can't pay your kids that." That's totally, I had literally last week a CPA here in my little town that was like going ballistic because I was paying kids. I'm like, "Are you kidding me?" I mean, I write this everywhere over the country. I teach CPAs all over the country about this. They're like, "Oh my gosh, I didn't learn this in the CPA exam." No, you don't. You learn it through the effort of becoming a creative tax planner. And so this CPA last week was like, "You can't do that." I'm like, "Really? Give me a break." And you know what? Frankly, I would love to have the IRS audit me. And I got to be careful, knock on wood. But if they audited me and say, "Do you really pay Molly?" I'm like, "Oh, you don't think I pay my kids to work in the business?" Hang on 1 second. walk out of the room, go get Molly, my key witness, bring her in, and they'd have the hot lamp on her, right? You know, they'd have the lamp on her at the table, and they'd be like, Molly, do you really work for your dad? Oh, you don't know the pain. He makes me shred paper. I can't do this. And the agent would freak out and go, okay, fine. You get the write-off. See what I'm saying? You got to make this real. You got to be ethical. You got to be honest about it. And you got to get your kids involved in the freaking business. Guys, this is the American dream. That we're tracking our expenses. We're building businesses. You're not quitting the day job. You're working your butt off, but you're not up all night playing video games or watching Netflix, binging on Breaking Bad for 4 days. You're building your business once in a while. See what I'm saying? I'm there with you. I went to bed at 2 a.m. on Monday night writing a blog article. I'm freaking a little older than a millennial, and I'm still working my butt off because I want to build something. I want to have some extra income so I'm not killing myself someday in the future when I do want to take a break. Anyway, that's the Molly story. It's, it's life-changing, right? Okay. Anyway, 2 more questions. Are we good? Sorry, that was Yvonne that asked that question. Thanks, Yvonne. That was good. I gotta have a drink. All right, what do we got?
Diego asked, referencing a series LLC, can each sub have its own entity?
Well, Diego, each sub is in this no man's land. It's not really an entity. It's part of the series LLC entity. So what Diego's talking about, everybody, is there's 15 states where you can have one LLC and then have as many baby subs as you want. I'll just call them a sub. But you only have to file one LLC. So you get the benefit of filing one LLC, one tax return, but I'm going to have a separate checkbook for each sub. And each sub's going to have a little different name, but they all flow into one LLC. It's pretty cool. So you can have all these different rentals. So I don't know, look at that again, Carly. So Diego's saying, is each sub its own entity? Not really. They're kind of a piece of the parent. And you're getting asset protection as if they were a different entity. Now, this is why, again, you want the book. I don't even have it memorized which 15 states you can do this. Can't do it in California, sorry, nor New York. Okay, but here's the list. Series LLCs, Alabama, Delaware, Washington, D.C., Illinois, Iowa, Kansas, Minnesota, Missouri, Montana, Nevada, North Dakota, Oklahoma, Tennessee, Texas, Utah, and Wisconsin. So if you have rentals in one of those states, you're allowed to do the series LLC. It's freaking awesome. Better asset protection, cheaper, easier, simpler. So Diego, you're on the right track. Matt
from YouTube. I have an out-of-state attorney suggesting to put my assets in a series LLC with the land trust. However, my state, Washington, doesn't recognize series LLC or land trust as a legal entity. Should I avoid?
All right. Matt, this is a really good question. And it kind of ticks me off because it's kind of a strategy I'm not a fan of. Now, I could bet, I just wanted to look at some of the states they might be recommending this. Matt's living in Washington. So here's Matt. And he's in Washington State. By the way, I was raised in Washington, born in Oregon. I was adopted. I don't even know who my parents are. I was born in Eugene, Oregon, conceived in the back of a Volkswagen bus. It was about a year after Woodstock. So I think I was conceived at Woodstock, and then they drove across the country and just had me in Oregon, dropped me off at a law office, and my parents picked me up. So anyway, true story. Anyway, so I grew up in Washington State. And I love Washington. Go Hawks, Russell Wilson, you're the man. Okay, so anyway, I'm here in Washington with Matt, and someone is pitching him on all of his assets in an out-of-state series LLC. Now, he might be thinking of Utah because you get COPE protection with a Utah LLC, not in Wyoming. And I can have a series LLC in Wyoming. I'm sorry, a series LLC in Utah with COPE protection. So Matt, I'm okay with that kind of so far. But then if you have a series LLC in Washington, Washington doesn't recognize the subs. So is the series LLC really helping us? I don't think so. So I don't know where all your assets are at, But so I'm already having some concerns. Now, here's the real one that Matt said that freaks me out. He goes, oh, but I'm going to have a land trust. So I'm going to create this little LT land trust, and that's going to be on title to my rental property in Washington. And then a sub is going to be the beneficiary of the land trust, which is a sub of a series LLC in another state. You see where I'm at? And some blowhard attorney is probably trying to sell this to Matt for $3 or $4 grand or something, which is something we would never charge to do this. And I never recommend this because here's the issue. Matt says, well, a land trust isn't recognized in Washington. Fine, I don't care. Let me ask this. Does a land trust give you asset protection? That's a good question, right? Well, let's go to the tax and legal playbook where I will tell you that a land trust is a bunch of crap when it comes to asset protection. Now, does a land trust give you anonymity? Does it help you hide? Can I avoid the due on sale clause? Sure. I mean, I love the land trust for hiding, but do I get asset protection with it? Hell no. Sorry, this is PG today. So, Matt, that is a bunch of crap. So, even if the land trust was recognized in Washington, there's no asset protection with it. It's a freaking hiding mechanism. Now, I've done here on this very YouTube Live, I've worn camouflage. And I've said a land trust is good for hiding. But once they've got you in their sights, you're a goner. Because it doesn't protect you, it just helps you hide. And someone with enough money and pissed off enough, they're gonna find you. So everybody out there, don't get sold this stupid land trust strategy for asset protection. Now, it's okay for hiding if you go in with your eyes wide open and know that's why you're doing it. So I'm not saying land trusts are bad, but don't believe anybody if they say it's for asset protection. It's for privacy and hiding. Now, then, Matt, I got it seriously. I'd have you get a consult and go, where's your rentals? You live in Washington. You're setting up an out-of-state series. Where are your assets? I got issues. I mean, something's not adding up for me. Get a second opinion. You can pay any of my attorneys $300 for an hour, and you might be out a week for an appointment, and get a second opinion. If you're going to spend all this money, you know, I'll put my name where my mouth is here and tell you that there's something weird there. Well, everybody, don't give up. It's hard. Life's hard. It is. We're here for a life experience, trying to make good decisions, hopefully having a good impact on other people and avoiding all those losers out there that are ruining our lives. Bad girlfriends, bad boyfriends, bad wives and husbands, crooks, thieves. Be careful. Be careful what people promise you, and always get a second opinion. Do your due diligence. Do a little bit of asset protection and structure. And I will finish with a quote from the infamous Kevin Costner. If you don't build it, they won't come. You're not going to have success in life if you don't have a structure to receive it. Call it karma, call it providence, call it a spiritual, God-given, whatever. If you're not ready for it, it ain't happening. So don't think you're going to get rich quick playing around on, LegalZoom in the middle of the night. Get some consultations from some real professionals. Keep working hard. Don't give up. The American dream is real. It's not going to fall in your lap, and that's okay. But have some other sources of income. And I'll be there with you. I'll be here every week doing a little Facebook, YouTube Live, trying to give you some good, helpful info. Now, I'm going to be in Philadelphia on the 2 days after Halloween. So that's on November 2nd. I'll be in Philadelphia for a full day workshop. Good food, $200. Boom! And we're going to sell out. So I think we've got about 55 people there now. I think 10 or so more seats. So it's going to be a great day. If you're on the East Coast, book a flight. It's a tax write-off. Come spend the weekend in Philadelphia. And Dylan, am I right? I think it's a home football game on Sunday after my workshop. And so you could get a tax write-off to come in for the weekend for the workshop and stay for the Philly football game. You got to tell me who's playing that day, Dylan. And then you got to subscribe to my newsletter. People, I send out a cool newsletter every week. And follow me on social media if you will. And then the live broadcast is on December 7th in Orange County. So if you're in the Southern California area, want to come out, get a tax write-off, or watch it live anywhere in the country for $99. And all of you get a recording of the workshop. So it's a wonderful little day. And there we go. Dylan, who are they playing? Man, he must have an Android. If I was on Apple phone, it would tell me.
November 3rd.
Yeah, who is it?
Bears.
The Bears. The Bears are at Philly on November 3rd. It's a tax write-off. Go on StubHub, get some cheap tickets. Now, you can't write off the ticket to the game, but you can write off all your food at the game, your travel, and your hotel to come to my workshop on November 2nd and stay for the game on the 3rd. Fly out on Monday. Boom! All right, everybody. Have a good weekend. We'll see you later. Keep living the dream. Oh, here we go. Bam.